Cathie Wood, the founder of Ark Invest and a money manager, slammed the Federal Reserve after it increased interest rates by 75 basis points and claimed that the United States was already in a recession. Interesting, right? The well-known investor has had a difficult 2022 due to rising interest rates, as her favorite disruptive technology companies are among the greatest losers this year. Nevertheless, Wood claimed that most of her clients remain with her, and new funding is coming in as investors seek diversification in a bear market. More than $180 million was invested in Ark in June. Before we discuss the massive recession around the corner, we will look at the events building up to this disaster. Don't forget to like this video, please share it with others, and subscribe to our channel. Your support means everything to us. Watch this video till the end and find out if we're in deep economic trouble, or is there maybe a silver lining? The pandemic brought on numerous supply problems. Prices for goods and services rose sharply. The recovery's increased consumer demand was too much for supply networks to handle. The chip shortage is the best-known example of this. It had some impact on practically every organization. While there has never been more demand for chips, supply networks are still recuperating from pandemic-related problems. Chip prices have reached fresh highs due to this frenzy, which may appear unprecedented. However, it is only a small part of the larger cycle surrounding chips. The chip cycle's operation is relatively straightforward. First, the demand for chips from consumers surged significantly in a short period, driving up chip costs. After observing the increased consumer demand, chip suppliers immediately attempted to develop new production strategies. They needed between 18 to 24 months to do this. The consumer demand had already vanished when these new plans were prepared to launch. When there is nowhere to sell the chips, supply chains expand. That's because chips last long and do not require frequent replacement. Therefore, none of the customers who just bought chips will need more anytime soon. As the supply surpasses demand, chip prices eventually fall. As a result of low sales, chip suppliers are forced to reduce manufacturing. Consumer demand starts to rise at the same time as people start to replace their outdated chips. Once more, it results in high demand and limited supply. Shortly later, the cycle starts over. Supply networks increase production when they detect significant consumer demand, only to discover that the desire has already dissipated. It repeatedly takes place. But as of late, we're in a peculiar circumstance. It's because the pandemic has inflated the cycle to previously unimaginable levels. What goes up must eventually come down, just as in every cycle. The worst part is that the scenario is not exclusive to the chip sector, but almost every good. Suppliers are in panic mode, trying to meet consumer demands for goods that are helplessly disappearing in front of them. In the middle of a recession? According to Wood's tweet, the U.S. economy entered a recession in the first quarter. Huge inventories will unwind and hamper growth for the rest of the year if they bloat real GDP in the second quarter, she continued. The investor, focused on innovation, claimed that because of supply chain interruptions and geopolitical threats, inflation has proven to be hotter than she had anticipated. As persistent as it has been, inflation was one area where Wood was mistaken. Supply chain. I can't believe it's taken more than 2 years. And of course, we couldn't have seen Russia's invasion of Ukraine. Although it has been a bigger issue, inflation has prepped us for deflation. The top-savvy investor also noted that early in June, consumer sentiment fell to a record low dating back to the 1940s. The expert claims that consumer sentiment is currently lower than during the two recessions in 1980 to 1982 and the global financial crisis of 2008-2009. The Fed disregards deflationary and potentially deadly signs, suggesting that it is more concerned with its legacy than the economy. The Consumer Price Index, for example, is a lagging signal according to Wood. Gold is one of the most vital leading indicators of inflation. Still, inflationary fears are receding, according to Wood, who also noted that the price of the precious metal has fallen from a high of $2,000 per ounce during the pandemic to $1,840 over the last 2 years. She also pointed out that the cost of lumber had decreased by nearly 50%. Fears of cost-push inflation like in the 1970s should vanish over the next 6 months, according to Wood. If inventories and stock prices are leading indicators for wages and employment, which she believes they are in this case, the events Cathie is foreseeing will likely cause an upcoming correction rather than a recession. So don't expect a 90% crash or anything to that degree. An overall consumer shift will also drag down the market correction. What are your thoughts on Cathie's opinion? Spark a debate in our comment section. See what people have to say. Take care until our next video, and thanks for watching.